Hello and welcome back. It is great to be back because today we're going to do a special episode. We're going to do a monetary policy explain video where I explain interest rates and also not just interest rates as a form of price control, but also rent control, pricing on goods. And we're going to try at least to display the intended effects and the outcomes. So this is a very political issue. We're going to approach it from a trading perspective, like we do with everything else, because that's what matters to us is how we can apply this to our trading. It is a limited effect, helps you understand the complete macroeconomical dynamic that is into play when we're doing all these things. I also want to set a disclaimer that for this analysis, I have not used any AI. I don't want to do that because of the bias it comes with. Just how I can ask it the question. I can just straight ask it, hey, give me 10 reasons why price control is bad, or give me 10 reasons why price control is good. You don't want AI that replaces your cognitive abilities. You'd rather want AI is it assists your cognitive abilities. But for this video, I've gone very old school, leaning on literature such as basic economics, as well as Marxist literature, The Intelligent Investor by Benjamin Graham here, and also The Alchemy of Finance. In addition to that, not that it means much anymore, I am an educated economist. I do have a bachelor's in economics and a master's in econometrics. However, it does feel kind of embarrassing saying that now. It doesn't really mean anything. It doesn't mean anything for my profession, my understanding. It hasn't helped me in much of any sense. It was more a study of interest because I already liked the subject. But this has been a requested video, so we're gonna get into it, starting with interest rates. All right, so here we are on tradingeconomics.com looking at the current US federal interest rate. It has been declining a little bit lately, but overall, since 22, from our period of almost 0% interest rates, we've gone up quite a bit. And now we're heading down again, but most likely, due to high inflation, you can see that interest rates are most likely going to be coming up again. We'll see though. Now, before I get into any of that, I want you to understand what interest rates are. Interest rates, I want you to think about it as simple as possible. Interest rates are simply the cost of borrowing money. If you have a mortgage, you already know this. If there is a 10% interest rate on your mortgage, you have to pay 10% in addition to what you borrowed. Not very difficult terms to understand. Now, why are interest rates moved up and down? It is because interest rates, as you can imagine, make it more attractive to hold your currency when you can get interest on it, because instead of borrowing, when you're holding money, you become a borrower. You get more gains from holding money, bonds, treasury yields, or other things. It becomes more attractive. It also becomes less attractive to take up loans. If you were here, you wanted to start a business, small business, you wanted to take up a loan, and you saw you could lock in a locked rate for, let's say, percentage point interest rate. So those are the locked rates. You could probably get less, 0.7 for locked for 20 years. Or when you're here, if you want to do it locked, 7% or something, 8%. This is obviously so much more attractive. So why do they do these things? Why does the Fed increase interest rates when it dampens growth in the economy? Because there's a lower incentive to borrow money. There's also this reduced incentive for people to take up mortgages, owning houses, creating all this new labor, investing, these types of things, taking risk with their capital. Capital gets more withheld. It is because it directly affects inflation. So if the Fed was to do a 100 point basis point, which is a 1%, up to 4.7% increase rate on inflation, sorry, on the interest rate, the effect on inflation would be quite drastic, but they're always quite careful because of the effect it has on the economy. If you are familiar with a book I've recommended, The Intelligent Investor by Benjamin Graham, you'll see that interest rates are referred to as the gravity of the market. It negatively affects all economic behavior. And you might question, why does it lower interest rates? Oh, sorry, why does it lower inflation? Interest rates lower inflation because consumerism is reduced. There's this lowered drive to demand for money that's being spent now. It is rather being held, right? So it becomes more attractive to hold the money. The dollar in itself becomes more attractive than spending the dollar away. I also made a small note here for you guys. Interest rates. What is the purpose? Lowering inflation. That is the purpose. It does also have a secondary purpose, and that is the debt economy gets reduced. As an economy goes on with low interest rates, debt is built up. The average debt held by the held by citizens in the country, no matter where, steadily increases per person. So in low interest rate periods, you have these what we call in economics credit bubbles building up because people are loaning and loaning and loaning and loaning, borrowing money, and not just for businesses, for bullshit as well on their credit cards, not paying their credit cards, that type of stuff. And in these high interest rate periods, that can pop. People are more likely to default on their payments when interest rates are increased. People that are already struggling with debt when money is almost free are going to drown when it's at 5% or even 3.7% like now. That might sound bad, but if I was to use a more humanized analogy, if you were to meet some guy and you asked him, "Hey bro, how you doing? How are things have been?" And he says, "Oh man, it's going great. I just got that mortgage taken out. I got this great house. I got a car loan too. Watch this. I just financed a Rolex as well. I got it all, man. I'm loaded." And you're like, damn, bro, like what the fuck? And he might feel good with that. And then you meet another friend from school and you're like, "So how are you doing?" And the other guy says, "Oh, I'm doing great. I don't have that nice of a car. I don't have anything financed. I've actually paid off all my debt. I don't have a mortgage. I built up a huge spy portfolio that I'm very proud of. I have a lot of investments. I'm actually bought a second property that I paid off as well that I'm renting out." So at the surface level, the guy with all the debt is gonna appear better off than the guy that has saved all that money and is in such a great state. He has an emergency fund. He's got no debt, so it's very hard to touch him. He has a big portfolio, so even if you de-wagify him, even de-wagified, he can live off of that. gets a new job, or whatever. He's just doing better. If the other person is de-wagified, he's just fucked. Sorry. Point being is that interest rates, even though they're always politicized, cause these ruptures in the credit cycle. But credit cycles, the point I wanted to come to, function as corrections. Because if we hypothetically were to run super low interest rates forever, the average debt would just grow and grow and grow. And then that credit bubble would just grow and grow and grow as well. Now, when these credit bubbles grow, so does the potential effect for recessionary policies to come into effect. The longer it goes on, it's called, they call in politics, kicking down the barrel. All politicians do it. And the effect it has becomes bigger and bigger until until just what would be a short recession becomes a bigger recession. But you also come into the question of what, uh, how much should we allow the economy to grow before we allow it to slightly contract? Actually, let me pull up a credit cycle chart. So here we are on a credit cycle chart. You can see there are these cycles of downturn, which are recessions. Here you have the 90s recession, the dot-com bubble, the housing crisis, and nothing else since then. You can make the argument that perhaps we're in one now, we're on the way, whatever. We were in one in COVID, but we haven't had anything like that since. And it's also very nicely explained here. You don't need to read all this garbage on the site. It'll just confuse you, I think. That's my thesis. When I was an assistant professor for my master's, just temporarily, I always found appeasement in being able to explain things in the most simple manner ever, like as simple as possible, these concepts, because I had these professors that would love to explain things. I mean, I could make it sound completely ludicrous, like something you don't understand. You don't even understand what I'm talking about when I'm talking about these credit cycles. But I don't want to do that. I always find it appeasing. I felt like I mastered the subject when I can explain it in very simple terms. Because this is not physics. I don't have to pull up any different difficult formulas, any intricacies or anything. But there is an expansion followed by downturn, these low rates, and the downturn. There is a repair period, which you often hear as, for example, recession comeback periods, pre-recessionary periods, and that kind of stuff. That's why on political party ends, you'll always see presidencies being criticized based on what kind of politics a president supports. For example, Democrats will say Bush caused a recession. Then Republicans will say Obama had the worst recession recovery in history. So those are two ways you can frame the two things. And if you have flipped them around and said Obama came before Bush, you would have said, or the Republicans would have said, Obama caused the recession. And then Democrats would have said Bush had the worst recession recovery in history. Although it is not that simple, there are other factors as well. You can, of course, do horrible monetary policy and have a slow recession recovery. You can also exacerbate recessions. In these instances, both are true. Bush was handed a very generous surplus by the Clinton administration. First time in a long, long time. The US was running at a deficit. Sorry, it was not running at a deficit and actually a surplus. He blew all of that. He spent trillions of dollars at war. He fucked everything in that sense. Oh my god, he disrupted so much with spending trillions overseas instead of, you know, for example, continuing that surplus and then using that surplus when the eventual end of the housing bubble came for the necessary things that would happen then, reduced income for the federal government, for example. But he had already, like a typical politician, blown that. In addition to that, Obama, yes, it is true that he had one of the worst recession recoveries of any president in history because of his regulatory policy. It was dog shit. It was red tape everywhere. He raised the taxes. He made it harder and harder. Even though every metric was looking better, it was looking better at a slower rate because of that. His trade policies were not good. APP, I remember, was a huge one. NAFTA's been replaced. NAFTA wasn't really a great deal, especially for those in the South, which have been traditionally poorer regions. His monetary policy was shit. He did a lot of other things as well that it isn't really necessary to get into. I think I'm gonna get my point across. But after the repair, you get into the recovery phase. The recovery phase is always followed by expansion, which again has a downturn. So it does lower interest rates. And the secondary effect is it shrinks or has an effect on credit cycle bubbles. And it also has the other different effect of if, let's say, we're in a recessionary period and the interest rate is at 10% and the Fed dips that down to 0.1%, there will be a huge influx, potentially, of capital, which could be very good for recession recovery. And also, if Obama or anything Bush is your favorite president or whatever, all I gotta say, and you're gonna come with some rebuttal, all I gotta say is fuck you. You're fucking brokey. Do something with the markets. Make a prediction based on your great financial and economic understanding, because that's what we do constantly. So, hopping on to the second subject, we're going to talk about rent control. What is the purpose of rent control, you might ask? So, of course, the easy, logical way to think of it is just it's to help people afford housing. And it's a very simplistic, almost infantile notion that if you say, no, you're not allowed to set prices higher, that somehow helps people. It is the same with, for example, the minimum wage. I do live in Norway, so we don't have a minimum wage. I can't really make any examples on that, but if we again turn to the United States, where there is a federal minimum wage now, $7.25. But most states have a higher one. Do they have a higher standard of living? Are they doing better? Are wages adjusted for cost of living higher there? No, no, they're not. On the supplemental poverty index, they consistently score higher. And let me explain to you why. Say we use Texas as an example, because Texas has never raised the federal minimum wage. They actually want to get rid of it. The 725, on average, people earn 725 for about 2 months. And the average age of someone making 725 is about, I believe, 16. So this is teenage labor. Teenagers getting into work, just doing extra summer job, some bullshit, and they earn it for like 2 months on average before the wage is increased. The highest minimum wage anywhere in the United States right now would be Washington, D.C., which sits at right around, it's right below, I don't remember exactly, but it's right below $18. I think it's like $17.95, something like that. Now, if we were to make a invested question on it, is Why not just set the minimum wage up to $100 and everyone would make good money? And people will tell you, well, that's ludicrous. That would just disrupt the labor market. Cost of living would go up. Okay, 90, 80, 70, 60, 50, 40. Why can't it be 25? $25 an hour sounds great to me. Well, what happens is already in the US economy and every other economy for that matter, the vast majority of people already make more than the minimum wage. Like what percentage of Texans make 7.25 an hour? Probably a percent. I don't know. No, it's in the low digits. And what happens if you increase that minimum wage? Let's say Texas double that shit, $15 now in Texas. The price of goods is inevitably gonna go up. And anyone that was previously making more than $15 an hour now has their wage decreased. That is not good. That is not how you spur real wage increase. Real wage increase isn't a dependent factor on cost of living increase. It is a natural occurrence due to competitiveness and other factors, such as the economy growing faster, disposable incomes going up. You know, they have a high property tax there, for example, a cut in property taxes. So disposable incomes going up. So adjusted for the cost of living, people are earning more, even if wages stay the same. It is completely different. Now let's move on to another form of monetary policy, and that is rent control. What is the purpose of rent control, right? Let's examine that. The purpose of rent control is obviously to make housing as affordable as possible, especially for those with low incomes. However, what kind of effect does that have? So, here in Norway, where I live, which is a state a lot of these price control touting guys like right now, Mamdani, Elon Omar, Alexandria, Felicia Cortez. No sé que la chica se llama, pero es una chica socialista. Pero está bien. Okay, so those guys don't mention that we don't have price controls for rent here in Norway. And then you get into natural questions. If we were to design an economy, well, why not just put the maximum rent for anything at $500? Everyone's living good. Like rent is like 10% of the disposable incomes. It's all good. Well, it reduces the incentive for people to rent out properties. I rent out a property myself. If it was set down to $500 a month, I would just stop renting it. That's the utility bill. So there would be it would just be vacant. It would just be vacant, or I would use it myself for something. I don't know what. Maybe I would make a huge recording studio there. Maybe I would have my office in my basement, like a real G. But joking aside, a lower supply of housing, there obviously comes a shortage. And that has been a phenomena absolutely everywhere. There has been price controls implemented for any major city, really. Because there you have this bubble of price controlled housing, and the bubble outside of that without price control obviously becomes smaller. There is a smaller supply. So outside the bubble of price control housing, rent goes up. So the average rent price actually increases, and the average amount of vacancies increases. A very interesting fact on that you might know. And also, these are political slogans. I'm going to bring the price of rent down. I'm going to set a max limit. These these greedy landlords are gonna, they're gonna get it. And that's not really how it works because I have a rental, like I mentioned. I'll just use me as an example because I believe it's easier to understand. I want everyone to understand this video. That's my goal with these explain videos. I'm renting my basement out. It's like a basement apartment type thing. It's all renovated. But if I can't rent at a normal price, it's going empty. And beyond that, I'm just doing if I set it at like 5 times the market price, no one is gonna be people are gonna think it's a prank when they're looking at the listing. Like, hey, oh, hey, we looked at your apartment for rent, but I think you made an error, like a typing error. And I'm like, no, no, I just want 5 times the market price. It's not gonna work. It is rent for similar units are all the same. But if the government implemented rent controls in Norway, that'll actually benefit me, the landlord. See what I'm saying? Why most of these billionaires vote for these pro rent control guys. It would benefit me because if, let's say, 30% of the city's residential units became rent controlled, right? A lot of those would go vacant and they would have to find some others. So the supply outside of the rent control bases would be lower, and everyone would want to get into those rent control apartments. Those would be full all the time. There'll be long wait lines on it, like always. And my price then for my apartment, as there is a lower supply, and now artificially lowered supply, probably double. If a 30% went down, yes, that would probably be double. Something like that. I haven't done a formula on it. There's no reason to do that. And also, I brought some literature I want to read. Mind you, again, this is not AI. So what I'm going to read from here is from the American Economic Association. Fully transparent with the source here, so you can go check it out yourself. There's a 93% agreement among economists there that a ceiling on rents reduces the quality and the quantity of housing available. And yes, that is something I forgot to mention. If if rent control was forced upon me and I wasn't, for example, allowed to lower or vacant my apartment at the bottom, I would fuck him up. I would I would cut costs, I would do anything, maintenance, internet speed would go down, everything. I would do everything I could do. And also, if they just fucked up my apartment like that, I would just have to rent it out at a loss. I mean, fuck it, I would crash out in that sense that I wouldn't maintain it anymore. So think about those that own huge apartment complexes, and suddenly the government's like, yo, run the whole thing at a loss, bro. They're just gonna stop maintaining it. They're gonna fire anyone working related to everything. Maintenance is gonna go down, and it's gonna become ghetto housing. It's gonna become shit. The city's gonna deteriorate, and it's no good in any way whatsoever. The government can step in and then subsidize that, saying, "Hey, you're gonna make profits, all that. You're good, homie. Dap you up and shit." But that's an completely unnecessary government cost, isn't it? When the government could have just not fucked with rent control and rent prices and rather allowed for more housing zones, for supply to enlarge in the meeting demand, and overall have a downtrend in rent prices. Instead of now spending money on it, we're potentially going to have to increase taxes for that. It's going to be a cost burden. And a cost burden in the government always, always, always translates to a new tax burden. So disposable income's going down, that sort of thing. So now I want to read the American Economic Association says. They have a 6 point list as to what are some effects that have been empirically observed when there has been rent controls implemented. So first off is the inhibition of new construction. They note by forcing rents below the market price, Rent control reduces the profitability of rental housing, directing investment capital out of the rental market and into more profitable markets. Construction declines and existing rental housing is converted to other uses. Studies have shown, for example, that the total number of rental units in Cambridge and Brooklyn, Massachusetts, fell by 8% and 12% respectively in the 1980s following the imposition of stringent rent controls. Rental inventories in most nearby communities rose during that period, just like I explained to you guys why. Similarly, in California, the total supply of rental units dropped by 14% in Berkeley and 8% in Santa Monica between 1978 and 1990, even though the rental supply rose in most nearby cities. And in the United Kingdom, which has imposed rent control since World War II, the share of all housing provided through privately owned rental units dropped from 53% in 1950 to less than 8% in 1986, reflecting the flight of investment from the regulated market. And that is, to put it bluntly, is directionally socialistic. The abolition of private property. I mean, fuck, it's gone. Shit, from 53% down to 8. Bye bye. Second point, deterioration of existing housing. So, by reducing the return on investments in rental housing, rent control also can lead to a drop in the quality and quantity of existing rental stock. When they say existing rental stock, it's just existing rental units. This may take the form of condos and co-ops or co-op conversions, or in some other cases, abandonment of unprofitable property. What they mean by that is units will often be changed definitionally to avoid these rent controls and just get sold into the market. Or if they can continue to rent without rent control, do that. It can lead to the deterioration of quality of housing stock as providers faced with declining revenues may be forced to substantially reduce maintenance and repair of existing housing. A study by the Rand Corporation of Los Angeles, the rent control law found that 63% of the benefit to the consumers of lower rents offset was offset by loss in available housing due to deterioration and other forms of disinvestment. Studies of rent control in New York and Boston similarly found marked differences between rent control and other units in housing quality and the level of expenditure. So that's how much they spend on maintenance and repair. So they spend less on maintenance and repair. You ghettoify things. And here's a big point as well: reduced property tax revenues. And keep in mind how I previously mentioned it can induce, if the government steps in and covers these rent costs, a new cost burden and an increased tax burden. But at the same time, they have a narrower tax base, which means less tax revenue, lower tax base because these rentals are now abandoned that you'd be collecting property taxes from. But let's see how the American Economic Association frames it. Rent control also reduces the market value of controlled rental property, both in absolute terms and in relative to increase in property values in unregulated markets. So the market value also reduces lower that means lower property tax revenue because property taxes are calculated by the value of a property, and that is often calculated by how much you can get out of renting it. The tax implications of this reduction can be significant as taxable assessed rental property values decline relative to unregulated property, a study of rent control in New York City calculated the loss in taxable asset property attributed to rent control to approximately $4 billion in the 1980s. That's a lot in the 1980s for a city. These distorted assessments cost the city an estimated $370 million annually in property tax revenues. The city of Berkeley, California, also estimates, this is from the city itself, estimates a significant loss in its tax revenues because of rent control. Instead of just reading off it, I've summarized them all, read it, and then summarized it. So, these substantial administrative costs, rent control can be expensive to manage because it requires bureaucracy, registered rental housing, collecting property data, setting rents, handling complaints, etc., etc. This is just seeing appeals, people don't want to get rent controls, or people that want rent control, whatever. And these costs affect landlords, tenants, and local governments. The example here being Santa Monica spent over $4 million yearly, this is a city, to regulate only 28,000 apartments. $4 million. For what? Next point being, now we're moving on to the second to last point. Point number 5 is reduced consumer mobility. Rent control, what I noted here in this summary is that it mainly helps the tenants, like I mentioned earlier, already in controlled units. Those outside get screwed. But it discourages them from moving because they don't want to lose their low rent because there's going to be queues for that. This can keep people in their homes for longer, right? Even if it doesn't fit their needs, like if it's far from work, the increased commuting traffic, and other forms of pressure on city services, public transport, those types of things. And also, last point being consumer entry costs. Rent control obviously makes it harder for new tenants to enter the market because the available units, like I mentioned, outside the bubble of you have those rent controlled units and then you have those non rent controlled units, is reduced. And these are all full. Rent control units. Probably there's waiting lines for them. Unless it's start with the government starts building mass government buildings, that type of thing. A full Soviet type system. So it it keeps people out. As long as you want to keep a market economy, still yes. If you want to go over to a full Sovietized system, then yes, you see this as a benefit. These greedy landlords. I'm evil for renting out the apartment I have. I'm bad. Rent out a house too, by the way. Bad guy. So it becomes harder because units become more scarce, obviously, and people may have to pay what's called finder's fees. Something I've observed, and they've also noted here, the American Economic Association. So it's what's called key money, or relying on informal networks to get housing. This is something I experienced myself living in Seattle with price controls, just off-market renting. So I did that myself. I paid my rent in cash because it was rent control areas. It was a rent controlled area, and the utility bills for that area. This was a long time ago, so rents weren't that high. I believe I paid $700 a month. Yeah, that's what I did. $700 a month is what I paid, right? If my landlord would have set it on the open market, it would have been restricted lower, and it would have surpassed with the tax burden and all those types of things. Even though the rent would have been pretty comparable, and even if it goes completely off the market still, the utility bills and those other types of things. So I rented, and it was very, very, very normal in Seattle to have these black market rentals. That's what happens in every form of shortage economy. Same happened in the Soviet Union, Socialist Poland, East Germany, anywhere. So people start relying on these informal networks to get housing, and this especially hurts obviously poor family, single people, and the young because they get locked out, right? They get completely locked out. So moving on to another thing is the social effect. I've made some keynote points here. There's something I've observed myself in reading through what the American Economic Association has observed by it, and myself as well in my studies. What I've noticed and mentioned is that rent control hurts the poor tenants the most because the quality of housing is reduced and new housing does not meet the potential demand that is available. I mean, the new housing becomes harder to access. I've already explained that. I made the comparison multiple times with my hands here to visualize it for you. Quality falls, and then poor tenants that cannot access that, those lower income families or low income persons that can't access those rent control units are now in a more expensive market. So they have fewer options. They often get worse off it because it makes housing harder to find. It also gives me a landlord market. I say me because I'm a landlord. Landlords like me would become more selective. If I can choose from a pool of people, I would be much more selective. If I had like 10 people applying to my apartment, that I'm renting out, I mean, I would like be like, yo, let me check you. How much do you earn? What is your job? I might start even doing interviews and shit, like they do in New York City. I would just I would set standards. And I'd be like, yo, if you smoke, get the fuck out of here. If you don't make this much, get the fuck out of here. And I would make so much more from it. I would have a better tenant. I would set requirements. You gotta cut the grass. You gotta do this. Da 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 da. You gotta clean my fucking car. Like you become a bitch. You become a serf, bro. As a wagey, a low income person, you become a serf, right? So that these low income families are obviously disadvantaged in this, and high income tenants like me benefit. And the examples here I noted down is obviously New York and especially Manhattan, because Manhattan has the highest average rental prices and therefore the most applied rent control. But the most selective, I've been to Manhattan for a long while. And the tenants there are very selective. It's a tenants market and it's overpriced. It's like $3,000 for a fucking shoe box. And then you have these other apartments. You go to big ass fucking 4 bedroom apartment, $1,000 a month. Those are obviously have 50-year wait queues. No one can access that. It's unrealistic. But for the rest, they got a slump with it. But you also have Berkeley, California, and Santa Monica and Cambridge. They benefit the better off tenants because we'd get higher rent prices for our stuff. If not, I would abandon it. I would use that capital somewhere else. And if it was forced upon me, then there would be no maintenance of anything. It does encourage discrimination in a sense that you get to see through tenants now that the supply is smaller. It would be inevitably discriminatory. Even if you can pay the rent, let's say I have some guy that so my rental unit is not expensive at all, by the way. I rent it out cheap because I like my tenant. He's been there for a while. He's a good guy. He's chill. He doesn't party or anything. He's super chill. He has like slightly below market price. But if we're in a market with super low supply, I could suddenly be more selective. I would have a guy apply that makes $100,000. He can pay that. Or have a guy that makes $200,000. I'm most likely going to pick the $200,000 guy. Why? Because it's safer for me, even though there is no real risk post here. And lastly, here coming up, it is economically inefficient. Tenants, they gain less. There's less effective market control. It's unlikely that you're going to be one of the few that have these rent control prices, unless like I said, there's a complete takeover, abolition of private property, etc., etc. Because it's discouraging new building off units. People don't want to build rental units if they don't know if they're going to get price control, that sort of thing, with the shortages. So that is loss of labor, construction labor, maintenance labor, and everything attached to it. Construction labor isn't just construction labor. You got to draw the whole line for it. Construction labor also includes the steel you've got to use, the companies that have to deliver the steel, those that make the steel, those that import it or produce it locally. The whole production chain goes bang, it gets fucked and it's done. It's gone. That is a huge economic inefficient model. And it's for commercial units, it's the exact same thing. You don't even have to think about it. Commercial, private, same fucking it comes to notice. And my main conclusion here is that better alternatives exist. Is there any way, you gotta ask yourself, is there any way to reduce rent prices without implementing rent controls? Does that exist? Yes, of course. I mean, we have documented empirical ways to do that. For example, property taxes increase rents. I'm a landlord. If there was high rent control, I'll just pass that on to my tenant. Like, what am I gonna do? I'm not gonna rent it out at a loss. So thinks everyone. So if it was abolished, again, would go down. There's also zoning laws allowing the expansion of new property, allowing building to happen. Let's keep it as simple as we possibly can. Supply. Supply is what we want. Supply is competition. We allow housing laws to expand. If the government gets rid of the regulatory policies around it or reform them in a way that encourages building, then that would eventually increase the supply and rent prices would steadily climb down in an isolated sense. Right now, we have this thing where Blackstone, and BlackRock and Vanguard is buying up absolutely everything to artificially raise rents. That's a whole different type of thing. That's a monopoly. We have antitrust laws for that. That doesn't seem to be working for some reason. But that is the core of it all. And I think I touched on it very nicely, all the points. The last one is the pricing of goods, price control on goods. This one doesn't need as much time as rent control because pricing of goods, if you say, hey, it's not going to be more than 99 cents for a gallon, or let's say, because most of my viewers are not in the United States, or let's say it's not going to be more than 20 cents for milk. What's going to happen? They're going to stop producing milk, bro. There's going to be shortages of milk. Milk is going to arrive at the store. It's going to be empty immediately because those that produce it, producing it cheap, they're not producing that much. The supply goes down. It's like every other example. You could nationalize it. The government produces milk. But again, yeah, if you do support that, then that's your direction. A complete, huge state, huge tax burden, abolishing private property, abolishing profit, and all of that. If that's good for you, then those shortages don't really. But has that really had any good result anywhere in the world? Abolition of profit, private property. Has that really led to anything good anywhere? Is there any empirical data showing those countries are better off? If you look at the free market index of the world, the freest economies in the world, we're consistently going to see Singapore, we're going to see Switzerland, two of the freest economies in the world. Spot number three changes quite a lot, so I don't know if I want to include that, but I've seen what have I seen? Let's actually pull it up. Free market index. Free market index. So yeah, so it's not. Oh, it doesn't change as much as I thought. Yeah, so it's Singapore, Switzerland, and Ireland, greatest economies in the world. Are those places shitholes? Maybe, maybe, maybe maybe. I don't know if we have someone from Switzerland, or no, we don't have anyone from Switzerland in the Discord. Maybe we have someone from Ireland. Is Ireland a shithole? You might say so. You might be like, yeah, fuck this shit, it's expensive as shit, and like, fuck this, fuck you too. But then let's go to the bottom countries, the most, the least free economies in the world, right? And yeah, I think you guys know what we're gonna be looking at. We're gonna talk about North Korea. Is that better? You gotta relocate from Ireland to North Korea, or the other example, Venezuela or Cuba. Those are shitholes. Those are absolute fucking dumps. Dumps. And for transparency's sake, I want to say that there is a counter argument to that, and that is sanctions. People say that it is caused by sanctions. That's why they are dumps. That's why they are the least free economies in the world, and that's why they are shit. But if we move to other non-free economies, look at it. Like for example, Sudan. Is that a great place? Is Zimbabwe great? Zimbabwe used to be actually really good until they expelled all the white owners of land and they started doing the whole fucking thing there. It was actually pretty good. It was like the South Africa of, or South Africa has been declining steadily as well, but it kind of was like South Africa. If we look at other countries here, Turkmenistan, that is not a sanctioned country at all. It is, if you don't know where it is, it's right north of Afghanistan. They call it the hidden North Korea. Is it good? No, it's an absolute fucking shithole if you look at the metrics for it. So, what can we conclude out of that? We can only draw conclusions out of the current proof we have. Now, mind you, there are some exceptions where price control seems to work at least. So, in absolutist terms, I don't think Milton Friedman would like me very much because I don't like the partisan shit. So, for example, in crises where they're like it's a hurricane, like Hurricane Katrina, they did impose in some places, not all places, price controls for water, so that those that were selling water wouldn't be selling bottles of water for $300 like they did at some other spots. Just kept it at like $1 or something. You might ask, but yo, can't just people buy everything that it hoards them? The real simple counter argument to that, no, no, because they implement laws as well. Like, for example, only one bottle of water per person. And that's where emergencies often disprove rules because that would be an emergency situation. And in that context, the empirical data that we have seem to favor price controls. With that said, I've gone through it all, except with the remaining factor is how does this how does this affect us as traders and investors? It's an investing Discord as well. We have a stonks guide, we have gold investing guide, and we do have the beginner trading guide, which needs to be updated. Yeah, I know that. You can use these metrics. You can do an overview of taxes, regulations, trade, monetary policy, as we just went through, and government spending to make a sufficient overview for your fundamentals. First you do your TA, and then you look at the solidity of the fundamentals behind all of this. Because, for example, you could be looking at rentals in some kind of country or investing in some kind of country, and you want to see the fundamentals of that. Would you rather want to, if I use an extreme example, would you rather want to invest in Switzerland, second freest economy in the world, or are you going to start investing in Turkmenistan? I think the answer there is very simple as an investor. So these are important things to keep in mind, especially as you expand as an investor, you become very good at it. I know I'm gonna get hated a lot for this. I know some people say it's not possible. It's not possible. But if you start beating SPY and you start becoming really good at investing, you're gonna do individualized things. You're looking at companies across the world. These are things to keep in mind. So hopefully I've been helpful here in this guide, and I'm gonna end it with that. I hope your question was answered to me. I do feel pretty content with this video. Yeah. Bye bye.